Hi and welcome to the Core Finance Master Investor Show. My name is James Faulkner. I'm the Editorial Director of Master Investor magazine. I'm joined by Victor Hill.
Good morning, James.
Morning, Victor. Merry Christmas.
Thank you.
The latest issue of the magazine is all about the future of money.
It is.
We've experienced several shifts over the past few decades, from the gold standard to the Bretton Woods paradigm, and then to the current fiat currency system.
That's right.
Is Bitcoin and blockchain a new paradigm for currency?
Well, I think it could be, and I think that the interesting thing is that this new digital currency revolution, which has been facilitated by a technological advance that we call the blockchain, has happened at a very important historical moment, namely one in which certain powers, specifically China, wish to demote the dollar from its preeminent position as the international reserve currency. And so what I've tried to do in this piece is to romp fairly swiftly through the history of the international monetary system, which of course starts with gold coin, which persisted for many, many centuries, and to look at how the classic gold standard system developed, and indeed to show in fact that it didn't actually last very long, although we tend to look back to that time as excuse the pun, a golden age. But in fact it had many inherent flaws, not least of which was that it relied on fluctuation in labour rates in order to keep the exchange system in balance. And that was that could be perpetuated at a time of mass emigration to the New World and so on and so forth. But by the time of the First World War, it had more or less already run its course. And of course, there were always attempts to re-establish some kind of international standard, and that only finally happened after the 1944 Bretton Woods Agreement, which basically pegged the dollar to gold by asserting a price of gold of $35 per ounce. And that only lasted 27 years, because essentially the dollar was, at the end of the war, the predominant global currency. America was running surpluses on both its trade account and its fiscal budget account. But these, by the 70s, had turned into deficits. And the strains under the system were such that the Americans decided to abandon the system altogether. Then we went on to the system of floating exchange rates, which has persisted until the present time, but with the consequence of the massive accumulation of debt throughout the world economy.
And one of the other problems with the fiat currency system is that it's very easily manipulated by governments. And we've seen that recently with QE and all that kind of thing. Isn't the attraction of blockchain the fact that it can't be manipulated by governments?
Well, not so long as the cryptocurrency remains independent in the private sector or somewhere out in cyberspace. But if a government could create a state monopoly cryptocurrency, potentially it could change the money supply at the click of a mouse.
And you mentioned in your article that China's already experimenting with that.
We're pretty sure that they're already doing this, and they're looking into it. They've been experimenting with a system which may come to fruition relatively soon. And under this system, banks would hold digital wallets of state cryptocurrency, which they could use on the say-so of the central bank. So the problem we have with Bitcoin and other digital currencies that are circulating today is that they are beyond the control of any central bank. And that has certain consequences which are not appreciated by governments, and they reside entirely outside of the banking system. Whereas if the state could abolish Bitcoin and its competitors, and the Chinese have already done that, they could effectively set up their own state cryptocurrency and run the economy accordingly. So particularly if they were able to abolish cash, which is something that many central banks aspire to do medium term.
And why does gold fit into all this? Because you're still quite bullish on gold.
I wouldn't say I'm particularly bullish. I think that it will have a role going forward as a hedge particularly against inflation. And as you know, Jim Mellon is saying that inflation is going to surge. But effectively, so long as interest rates remain low, the opportunity cost of holding gold relative to cash or bonds is also very low. And particularly, we saw a spike in the price of gold back in 2010-11 when US interest rates, or real interest rates, turned negative. And I don't particularly expect that to happen. I mean, we have effectively negative real interest rates in the UK at the moment, but that's largely a short-term phenomenon, in my view, due to the devaluation of the pound post the Brexit referendum. So I think gold it can be considered as a useful hedge. Basically, gold is a commodity, like any other, albeit one that exerts this psychological lure over the human mind, and it will always be found precious, not least for its value in terms of creating jewellery and beautiful objects. But as an investment, gold is one that doesn't generate income, and it could only make capital gains for you as I say, in times of falling interest rates, and that's not likely to be repeated in the immediate future.
So in a world where the monetary landscape is shifting beneath our feet, how should investors be positioning themselves now?
Well, it depends on what timescale you're looking at, but I think you should be aware that a possible devaluation, a significant devaluation of the dollar, is actually quite possible. I'm not saying probable, even in the short term, like 1 to 3 years. And the revaluation of the Chinese currency, the yuan, is equally possible. So that it might be a moment to actually reduce one's exposure to dollar-denominated assets and to increase exposure to yuan-related assets. What we saw, and I mentioned this in the article, is that China basically wants to promote the yuan as a currency in which oil exporters can be paid. And one of the things they've done in order to achieve this is to create a contract on the Shanghai energy market. So starting from this month, exporters of oil can price their exports in yuan and then convert any unwanted yuan balances into gold. And I'm saying that this is a very significant development, and that the key event would be whether the Saudis are prepared to start selling oil in gold. If they do that, that could suddenly precipitate a shift in the currency markets. Okay.
What are you going to be writing about next month, Victor?
So, James, January, it's Christmas now, New Year coming up. 2018, I'm going to be looking at the main themes, the upsides, the downsides, the opportunities, the risks that will characterize next year. And I'm looking at markets, I'm looking at sectors, I'm looking at emerging markets, I'm looking at different asset classes. So it's a beautiful smorgasbord of different opportunities that I hope to share with you.
Good stuff. We're looking forward to that one. That's all we've got time for today. You can read the full article on masterinvestor.co.uk. We'll be back next month. Thanks for watching.